Have you ever wondered how to grow your investment portfolio without the daily hustle of active investing? The answer might just be indexed funds. These are a type of investment fund that tracks a specific market index like the S&P 500. The goal? To replicate the performance of the chosen index. No need for a stockbroker making daily trades on your behalf. So, in essence, indexed funds are a type of passive investment that mirrors the performance of a market index. Now, what makes indexed funds stand out is their approach to investing. Indexed funds are the poster child of passive investing. Passive investing, you ask? It's a strategy where, instead of aiming to beat the market like in active investing, you're simply trying to mimic it. By tracking a specific market index, indexed funds aim to replicate its performance, hence the passive part. The benefits of this approach are twofold. Firstly, it's a straightforward strategy. You're not trying to pick the next big winner, just following the market's performance. Secondly, this hands-off approach often comes with lower fees. With no high-priced fund managers making frequent buy and sell decisions, the costs associated with indexed funds are generally lower than their actively managed counterparts. The beauty of indexed funds is that they offer a simple, cost-effective way to participate in the market's performance. It's like having a backstage pass to the financial market's grand performance without the high price tag. One key advantage of indexed funds is their ability to offer diversification. But what exactly does diversification mean in the world of investing? Well, think of it as a way to spread risk. Instead of pinning all your hopes on one stock, diversification allows you to invest your money across a range of assets. It's like casting a wide net in the ocean of investing. Now here's where indexed funds come into play. When you invest in an indexed fund, you're essentially buying a small piece of every single asset represented in that index. Whether it's the top 500 companies in the S&P 500 or a collection of global stocks, you're spreading your investment across a basket of assets. This approach lessens the impact of any one asset performing poorly on your overall portfolio. With indexed funds, you're not putting all your eggs in one basket, but rather spreading your investment across various assets. Now, let's talk about the cost-effectiveness and consistent performance of indexed funds. One of the many reasons why indexed funds have become a favorite among investors is their cost-effectiveness. With these funds, you're not paying for a fund manager's time or expertise to handpick stocks. Instead, you're investing in a fund that simply replicates a market index. This passive management approach translates into lower expenses for you, the investor. The less you're paying in fees, the more of your money stays invested, compounding over time and potentially leading to greater wealth accumulation. But what about performance? Well, that's where the consistency of indexed funds comes into play. Unlike individual stocks that can be volatile, index funds aim to mirror the performance of the entire market or a specific sector. The market, as history has shown us, tends to grow over time. So by investing in an indexed fund, you're essentially betting on the continued growth of the market. Sure, there will be dips and peaks along the way, but over the long haul, the trajectory is typically upward. While they may not deliver extraordinary gains, indexed funds offer a reliable, cost-effective investment strategy. They provide a way for investors to participate in the market's growth, without the high costs or unpredictability that can come with other investment methods. So, if you're looking for a cost-effective way to invest with consistent performance, indexed funds could be just the ticket. In conclusion, indexed funds can offer a powerful tool for building wealth. With their innate ability to provide investors with a passive, cost-effective, and diversified approach to investing, indexed funds are a compelling choice. Their ability to replicate the performance of a specific market index offers a consistent, hands-off investment strategy. They allow you to spread your investment across a basket of assets, reducing reliance on the fate of a single stock. And let's not forget, their cost-effectiveness means more of your hard-earned money stays invested, working for you over the long term. While they may not deliver extraordinary gains in the short term, their consistent performance makes them an attractive option for long-term investors. Remember, it's essential to do your research, understand your risk tolerance, and consider consulting with a financial advisor. Thanks for tuning in, and don't forget to like and subscribe for more financial insights.